That's terrible. Can you believe it? I've been chatting for how long now? I have no sound. Egads. My apologies, everyone. That's terrible. I've been chatting away this whole time, and there's been no sound. I had to turn off my mic yesterday. Oh my goodness. Sorry about that, everyone. That's our regular trading hours gap. Silent ICT session. Good morning, no sound here. You are muted, Mike. No, Mike. I just saw all of a sudden the conversation popped up there. I just tuned into the channel and I didn't even recognize that I have all that chatting I've been doing. Well, hopefully you can see where I was pointing with my little pointer here. That was sad. Sorry about that. How observant were you guys? Did you get an idea of what I was circling with my little crosshairs there? Hopefully, if you've been here enough times, you get an idea of what it is I'm looking at. That's sad. Okay, well, I'll have to go back and talk about some of those other moments in a bit. It's like talking to my spouse. Well, thanks for sticking in there. So we'll see how it reacts inside here now. Well, that was a lot of babbling for nothing then, wasn't it? So I'm just looking to see if this holds price right now. I've got nothing, even though we've just ran above this high here, I've got really nothing that supports a reversal unless we trade below here. You guys you can hear me now, I hope. Make sure you can hear me. Yeah. It says you can hear me. We have these relative equal lows below us here too. Can you guys hear me now? Just give me a thumbs up or a nod if you can hear as the audio returned. Loud and clear. Perfect. Thank you, sir. Thank you. Thank you. All right. See how we've come all the way back in. Give you a perfect fill right there. You see that? Oh, not algorithmic, eh? That has nothing to do with algorithms. So whoever banged the gavel in their board meeting this morning stopped it right on the dime, right on the level we're looking at. Is that not a strange coincidence? Not algorithmic. I can see why Michael kind of chuckles to himself all the time when people just go, there's no algorithm. Okay. So we got these highs taken, still don't have a reversal yet. Looking at half that wick. I want to see that whole wick get taken out. Because then you go back into, do we trade below this level? So I want to see that just turn into a wick and start pushing back up. I don't like all this waffling going on here either, so. We're at the opening range, so it can get kind of sloppy. We're setting up this range. Okay. Whilst that's still fumbling around there, I'll keep an eye on it if something happens. Get you to Bitcoin. I'm looking for this fair value gap here, this BISI to close in Bitcoin. I don't see any need for a major reversal just yet, even though we are respecting, I think I mentioned that we're respecting the consequent encroachment of this BISI, and we've come back to this old high here. So if that holds and then we get a reversal, you're looking for fair value gaps here, this and this. You want to see break on the market structure to the upside and then start running back into this range here again. So until we see this and this get taken, I still got more downside. That's the next objective there. I think I was calling for, oh, it's happened now. Soybeans was looking for a return back into this fair value gap here. We've hit that. I want to see it close above here today, come back, find some support at this and still push higher through here unless we get through it today. I wanted to see this just dip down here one more time. So tomorrow we could see a run back into here. It's that little fair value gap. I want to see that create a fair value gap in here. Find support off this candle. Start pushing higher. We've got the reversal here. You've got this mitigation block here, or this last up close candle here that does not take out that old low. You come back inside this and that fair value gap to push higher. I'd like to see this come back to this candle's low and then continue going lower. I want to see this now close above that level here. Use this candle, big bold candle here, get above here, and use this candle and that fair value gap to continue going higher. Coffee, we got this. I want to see this close above here today. Then use tomorrow to come back into here to push higher with a wick. Live cattle. That's the area we just drew out this morning. You want to see this close above here, come back, find some support at this, but I want to see this candle used for support. So I would like to, ideally, I'd like to see it get through here on a close and then use this level or that candle to go higher. This one here, we have the consequent encroachment of the fair value gap here. That's the one they're kind of working inside and inside this gap here. So once we break out of that gap going higher, you're going to see the breaker giveaway And then I want to see this low get taken here on a close, find support at it, continue going lower, or through this candle's high, take that out, and then start driving higher. That busy there. This one here, I wanted to see it return back into that breaker and then continue going lower. And little piggies. We're just, we have traded lower than that. It's just a couple of spots lower. So if we return back into the SIBI of this and then get lower after tomorrow, we'll see how that SIBI and the consequent encroachment of that, busy. We'll see how that busy holds priced and goes lower. And that's where the objective is, to look for little piggies. Reversal, fair value gap. You actually gapped above it here and then traded back into it all the way back inside that here. So that gap up above, it opened above, traded back in, is your long. Premium array through it, highs taken, next premium array inside that larger range is here and here. So you see how it reacts off that highest one here. If we can get back up into that level and react off that and come back down, look for another return back into this range here. Fair value gap first, this little swing point, and then here. So the reversal only was enough to take out these old highs here. So again, you got to pay yourself at these highs. If you're running for up here, which is what we wanted, but didn't get it, fair enough. Be prepared to react to whatever changes you see. So if we trade below here, like I was mentioning, if we trade below that, then we're on the wrong side. See how we traded below it? So if you were trying to go long there and it traded below, it came back, gave you an opportunity to get out right there and continue going lower. Just marking something up on the chart here. I'll get this one to you guys as well. Take note of that fair value gap right there. I'd like to see it pull back into this range here. For me, you'd have to trade through this, come back, find support at this, and break the market structure to the upside through this candle. The consequent encroachment of this wick is the same as the consequent encroachment of that SIBI, right on the money. And it is no, I was thinking if it might be a optimum trade entry, but it's not. We have new day opening gaps below you here at 19,147. It's way down there. The 15 minutes for our opening range. So 25% to get this high. It only moved to 25% of that regular trading hours gap and quickly started moving away. Shows weakness. It's fair value gap here now. Watch this breaker. There's that opening level. Rebalance this fair value gap here. I want to see if we get above it. And I'm going to see that mean threshold get taken before you get back into this regular trading hour gap again. Otherwise, we're just inside this range here still. It's the open. We've got above here now. So we come back and tap the top of it already. It's going higher. Find some support off of this fair value gap. Now becomes inversion right off the top. Looking for it to eat through here and dig back into that opening range again now. Keeping in mind that 50%. Looking for your first opportunity to unload at rejection block. With equal highs here. Fair value gap above you here, small one here, and here. Now, if you didn't see that, we called that going higher right off that fair value gap there. Now we have the break. So if you're not sure if we have a continuation higher, look for the return back into this breaker here. See how we return to that fair value gap? Perfect fill right there. And I've taken out these relative equal highs. So from just this return here, if you manage to take 500 to that fair value gap there, that's 59 handles. And we're just watching the opening range. So see how we're getting support off the 50% of that range. Trade up, come back into it. 75% of the range almost filled now. I'd like to see it come back into here, find some support off of that, continue pushing higher for these relative equal highs here and here. Isn't how we get a fill of the gap. Those highs are now taken. So now if our objective has been hit and we're looking for these equal highs to get taken out, before it gives us an opportunity to get back into this, I'll wait now, because now we've got these highs taken. You look for this fair value gap. If we trade below it, which means it brings us back into this candle, do we find support and continue going lower back inside this range? Or do we find support off of this? So what I'd like to see is it trade back down to this candle, quickly reject off of that, trade back up, come back, tap it one more time from the top, and then continue going higher. And use this breaker here as support to go higher. So there's the fair value gap. We're watching how it reacts off of here. There's the high. Now if we're going to use this to go lower, we use that fair value gap busy. This just tells me we're coming back into here. I'd like to see ideally this candle here get taken as well, but if we're just looking at this, ideal entry is right off that 50% again for a short. If you're going to go short on that with a body that closes below this first, a wick brings you back up into here right at the 50% to short it, and if it closes above it again, comes back and taps you, you get a chance to get out before your stop is taken. So you got two scenarios you can do here. One to support going higher, and this one to support going lower. So it gapped. It's still just wicking below here right now, and we're digging into this breaker. So mean threshold of that breaker is pretty much right here on the opening of the regular trading hours. You want to see where that closes in the next 30 seconds. And then that's the level right there. So just watch. It's just a study of price action right now. Now we've got these relative equal highs sitting right here. 10 o'clock may run up and take those out. See how we haven't got a body traded below here yet? We've just come back into this breaker, and you want to see this trade through here now. We have not traded. See how it's come back and tapped it? That would have been the ideal entry to short had that body traded below this level, and it didn't. So we're going to wait. You got to be specific about what it is you're looking for. Have your rules set in place, and if it takes off on you, just double check it, back test it, and if your rule needs to be modified, modify it. If not, stick to the rule. Don't chase price here. This could be just the next price leg up, which would take that kind of high, interesting higher. That take us. That takes us above these relative equal highs here. Here's the 10 o'clock open. Now we just wait and see. Now that we want to see if the body closes above here, not just the wick. And you wait, it's 10 o'clock, so give it a few moments. We may just see a quick run above this high and continue going lower. You can argue both directions. Wait and see. That whole regular trading hours has been refilled now, rebalanced. What I'd like to see is if it continues to get outside of this range, that will be considered a balanced price range. Come back, find some support at it and leave, or find some support at it and leave to go lower. So that regular trading hour gap is what we're looking at. We could be running back and forth in here for a while until we balance that out. And then once it's all balanced and we get a nice displacement candle to an upside or downside, look for a reversal or return back to the high or the low, depending on which side we break out from. I'd like to see it go higher. You had a body close above right here. Trade it back into it. Tap it one more time. I'm looking for this to take out the highs. We're so far finding support to go higher. That's the key level for me. And that 50% of the range, we're working that upper portion of the regular trading hour gap has only been worked very loosely. We've worked the middle, premium and discount areas. Yeah, he's finding support inside here still. Give you a little mohawks. Just a reclaimed fair value gap right now. We have relative equal highs at 647 and a nice SIBI sitting right above us there. We do dip back into this range here. I like that level. A little area of interest here. No silver bullet just yet. It's like a crouching tiger. Relative equal highs above you here and whole Candyland above you here. We've got jagged, equal hot lows made jagged. Now you're looking for a run back up into here. It's probably sitting in this larger range right here. You're probably sitting at 50% ish. For the next 10 minutes or so, I'm looking for a silver bullet. Something to open up here. If this stays open, just keep driving it higher. Now you got new highs taken. And you come back up in a 15-minute fair value gap and hit the breaker. There's the fair value gap there. That's for me, the silver bullet. Anywhere inside there. I don't want to see it close below. That candle's low. If you want to see it get some legs now, get out of here. And those of you who caught the reversal here, I gave you this as it was happening. There's the reversal. Right on the money. Old highs taken. Old highs taken. Consolidation. Silver bullet entry right there. Now you want to see that just continue to shoot up there and leave this open now. Come back and revisit. There's the fill. Remember talking about breaking out of this regular trading hour gap, getting a displacement candle, coming back and finding support at it. Remember 3875, 3685. Coming back, find support at it and start pushing higher. Now this becomes an area of interest for me. If we trade through this and find support at this, I'm starting to look for a return back into those lows again. Otherwise, still going higher. And model 1 entry. We close below this candle or this candle. Then we're going lower. Watch what's going to happen in the next 10 seconds in here. Let the wicks do the damage. You want to stay inside here or above. So usually with the silver bullet, you want to see it get some legs and get the hell out of Dodge. If you're just taking 10 handles out of that, open and closed on it or just above it. I'll get some support here and just get out of Dodge. Start leaving. Get some legs. What we need, my friends, is pulling out an old friend here. That's what we need. Going to motivate these markets to move, I guess. We need a little food. Yeah, not the kind of silver bullet entry I prefer. I'd like to see some momentum here. So this is a decision you have to make about how long do you want to wait inside a consolidation for. If you're sure that that's the level you like, and these higher 15-minute levels are on your radar, and you can weather just sitting here watching this paint dry. Is there any of you who got in at this reversal here when we were calling it? Did any of you get in on that? Because so far you're up 80 handles. That's all you want to see. Get a little bit of momentum. Little carrots, all you need, a little motivation. Little motivation is all one needs. Do. Little motivation. Oh yes, the infamous carrot. Oh, we're starting to head for that 15-minute one. Keep motivating the carrot. And we want to look for 647. 647 right there. Wherever that carrot is sitting right now is where our next level of interest is. Again, I'm keeping my eye on this level here and that order block there. I'd like to see us get back into the consequent encroachment of this, or just tap this old high and leave that portion open. If not, just keep driving higher. 647 is the high, is the objective. And if we get through that, the next objective is 672. Somewhere around there, 672. There's 634. 647. Good morning, Sir Derek. How are you, buddy? There's 647. Now 672. Carrot. Motivation. We're pulling out the carrot again, Derek. We just popped above that 647. So you want to see if this forms a fair value gap here now. What inversion fair value gap you talking about, Derek? Will it touch the inversion fair value gap daily and then drop? Okay, daily, sorry. You did say, you did mention what it was. The daily. Ah, yes. 686. I'm with you, Derek. This right here. Well, I think that's the wrong liquidity, Derek. I think you're right. We'd have to lose this low here. Overall, I think if this was a reverse or change in direction, I'd want to see that low get taken, find support at this, and start eating through this level here. This is the crazy Ivan. See you the next few minutes. Thank you. That is the 1 hour run on liquidity. They're just running liquidity. I want to see this low get taken here. But I got 3 more minutes. Maybe I should look for the pro. Much appreciated your stream. But are you getting to hear Michael's stuff? He's pretty solid with pretty clear explanations. Still some more ranting, etc. But his content, that's it. Yeah, no, I haven't. I've been watching some of his videos on the side. I haven't been keeping up with him, no, but I like the fact that he's he's putting it out there for sure. And this doesn't mean that I haven't got anything more to learn, because I constantly have a desire to learn more. But I've said I would put videos up here, and I'm not here to compete with Michael by any stretch. But I'm still doing my thing, and Michael's, whatever he's teaching new now, is not really going to change a lot of my trading or what I look for. It's hopefully going to make it a little cleaner and give me more cleaner objectives to reach for. But otherwise, it's not going to change much about how I trade. Unless I come across one of his videos that makes me go, oh my goodness, there's a piece of information like this new event horizon thing he's talking about. That might be something I would look into. As an upside objective or downside objective. Otherwise, you know, I don't see much about any changes for upside objectives using inversion fair value gaps. That's pretty much my go-to staple. And I haven't been able to see inversion fair value gaps and fair value gaps fail me yet. And so far we're in this one we called this morning is over 140 handles already. I'm going to put my little carrot along here. Yeah, I totally agree, Derek. You know, I want to be able to catch up on his stuff and come back here. So if people didn't mind, I'd love to be able to do a little more of his stuff and come back and try and share it here, make things a little more clear. I just don't want to clutter things up. Trying to experiment with stuff on here and clutter things up for people. But I do want to do more of his, like I'm just finishing up his 16, his lecture 16. I still haven't done lectures like 9 to 16. I haven't caught up with those yet, but I have heard that 16 was a good lecture, so I'm kind of picking through that one right now. And I still have family here, so I'll do more catching up when family goes back. I have a couple of weeks before I head off to Thailand to catch up on some of his videos. And then when I go to Thailand, I'm going to be way behind because I won't be able to watch his stuff from there for sure. Might be a good idea, Derek, for just say I'll do like a Tuesday, Wednesday, Thursday, and then I can spend time just studying it. I'll catch the meaty parts of the week, or a Monday, Wednesday, Friday, or something like that. And then catch Michael's meaty part of the week. Because I think next month he's going into some placing orders. So right now he's got his son just gathering up information. So I like that idea. I just want to see this objective get hit right now. That's the consequent encroachment of that hourly SIBI. And obviously the daily inversion fair value gap Derek had mentioned earlier. I've got mine sitting at 119,670. Let me just double check that. Ooh, you're right. I think it's right here. What's the high of this candle? 683. That's where we should be looking for. Problem with them is they are so long. Yeah, they are. Like there's a lot of rambling. But I've got a little technique on how to get through a lot of his stuff, his rambling, and try and cut out as much of the video on his rants. Sometimes I don't mind listening to the rants, but sometimes people just don't have 4 hours to go through, so you have to kind of chop it up and get to the salient information as quick as you can. Yeah, it's hard to watch those long replays. I kind of skip over it. You got to kind of just take your mouse and you got to kind of click when you hear him starting to go into a rant. You got to kind of just click it a little bit ahead, click a little bit ahead, and if he's still on a rant, and you watch the icon on the screen, you watch to see if his mouse is moving. Just click, 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 and you slowly start chopping it up. And you start eating through some of his rants, and then start getting to some of the salient stuff. Or watch the chart and you say, I want to see this thing here, and see if he starts talking, you see his mouth start moving. So then I start chopping along. And if I see the candles moving down to an area that I think is interesting, I'll stop and pause to see if he's commenting on it. And then I will say, okay, he's talking about something salient here. Or if I see his mouse moving like crazy, I just go, oop, there's something he's chatting about there. I'll go back and listen for a few minutes. And then if he's not, then I'll go back and I'll look for the next area that's important for me, and then see if he's talking about it. And then sometimes we bring in a nugget that we don't even know about, that he never taught us in the mentorship, or even in the charter members. Like he's still delivering some new content, some new stuff that's amazing. But again, a lot of people start jumping to all his new stuff, and they start thinking they've got to apply all the new stuff as well. Like he's giving you so many things. You could take anything that he's talked about over the last decade or so and turn it into money making. But people just seem to think they want the next golden nugget is what's going to change their life. And it's like, look, if you've got yourself a setup that's working, stick with it. You don't need any more tricks. Just stick with it. And it's like everybody's afraid that if Michael opens his mouth, you're gonna miss an opportunity to have the one thing that's gonna move your life in a different direction for trading. And if he hasn't already done that for you, then a few more nuggets, because he's given out nuggets for since I've been with him in 2016. He's been giving out nuggets all the time. Once you find what works, stick with it. And if you get a little nugget that helps you improve what you're doing, then great. But people seem to hang on every single thing and like, there's a nugget that's going to change my trade. There's a new nugget that's going to change my trade. Like, well, No, it won't, unless you've got yourself a setup already and it helps you improve your setup. Waiting for the next little piece that you think Michael's going to give you the final key that's going to unlock everything for you, I think is wishful thinking. I think it's great that he's starting off with people that don't know anything. It's a great opportunity for people like that. But for people who've been in it for a long time, if they think they're going to get this major life-changing piece of information that's going to switch their trades to positive, and they haven't developed a technique by now, I think it's wishful thinking. But that's just me. I know, I appreciate the fact that Michael's got lots to say, and he's got his beliefs, and bless him for that. And you just got to tolerate or put up with his rants. You got to love the guy for he's giving you some amazing information. So what you do with it, sometimes you got to nothing. You don't go digging around in order to find a diamond. You got to dig around in the dirt, right? And sometimes he gives you a little rant, and you just got to sit there and go, okay, he's ranting again. Just wait. He's waiting for price to show him something that he can teach on. So if you're in a consolidation and he's ranting, move ahead the bar and see, once it breaks out of consolidation, see if he starts talking about that. Price seems to be in the 4-hour inversion fair value gap already, and if it doesn't get into the daily inversion, it may signal weakness in the afternoon. Disposition of the head go lower. I found his first 30 minutes market opener material to be fresh and helpful. That first fair value gap of the day opening gaps, propensity to trade back into the 50% cool additions. Yep. Yep. You talked to Abs about that. He's been studying that for over a year now. You'll see me marking them every morning. We've been looking for more information on this first fair value gap of the opening. I like the event horizon idea. I'm just wondering if it's fractal and he's not sharing that with anyone. I think any idea he brings to the market, it's fractal. It occurs on all time frames. And I wonder if when he presents something that is specific to a certain time frame or time and price, that it is not fractal. Like if you're looking for fair value gaps, for example, that they're fractal on all time frames, 50%, or the consequent encroachment of imbalances and things like that. They're all fractal on all time frames. So when you look at that event horizon thing, it seems specific to new day opening gaps. But is that specific to gaps? in price? Is it specific to fair value gaps? Is it specific to, like, when you're talking about new day opening gaps in price, if it's a fractal thing, I wonder if there's some sort of correlation between, you know, this fair value gap and that fair value gap, and the event horizon being like 50% of that. So if I pull my fib tool into here per se, and this is just an idea I'm kind of mucking around with right now to see if there's any truth to the idea that 50% of that range, he talks about event horizons being like a 50% between two new day opening gaps, new week opening gaps, new day and week opening gaps, that event horizon being 50%, and looking at the difference between those. So I'm kind of looking at that idea right now, as because I love the idea of fractality, and I love the idea that price is fractal, and everything he's taught is fractal on all time frames. So I wonder if there is something there when you're looking at, you know, specificity between two gaps, for example. If I take this here and I go from here to here, that the 50%, see how the 50%, we're working the hell out of that 50% range between these two? Then it finally breaks up above. Remember, he talks about above and below the 50. Anyway, that's kind of a thing I'm kind of working on. So if we look at this here to here, see how we're hitting 50%? Now the question is, do you take the whole thing or just the edges? Consequent encroachment to consequent encroachment. I don't know. These are things you gotta muck around with, play with, and find out what's consistent. I think he just talks about from the high of one to the low, or the low of one to the high of the other, and then look at the 50% in between. I wonder, Derek, if we don't get back to 632, like we don't take out these lows here and get back into 618, like back into this right here. Come on, pop up in there. Okay, hello. Welcome to the carrot. Dun, dun. Now push through there and let's give us a little lift into here. So if you come back into that new day opening gap from this one I gave you earlier, that's 506 to 672. That's 166 handles. Right on the beezer. All right. Jeepers, why I have my alarm so loud? There we go. Now we're digging into the imbalance. Let's look for this level right here. Now I'm constantly looking for, once we break an old high, I'm looking for that next fair value gap above me. That is my indication, or below me, that is my indication for a reversal. And all the time you don't have that, you're still going higher. So you're looking at 200 handles so far. If we can get to that 705, that's 200 handles. So we've hit Derek's daily inversion fair value gap he'd mentioned earlier. Good for you, Derek. Like it. I do like it. Now, do we push higher? And start filling that hourly fair value gap at 710. And then another little imbalance, a little sibby above that to 750. Or do we get a break in structure? I want to see it break below this consolidation here. Take out that candle, come back and find some support at this consolidation as a CAM Model 1 entry and continue going lower. Or if we take out this old high here, I'd like to see that start pushing up into that 710, 750 mil. Love cup of tea. She was all worried the other day. She come in while I was in the middle of my show, yakking away. Didn't realize I was still live. So cute. Those are the things I'm going to keep. I'll be able to reference those someday in the future. Just laugh about my mom walking in on my show, not having a clue that I was still live. She's got right now, she's got her arm in a sling. You can't see it, but she's got her arm in a sling. And I'll tell you why. We were at a playground and she was watching all these kids on the, you know what those gliders are, those little handles that have the wheels on them, and you slide across. It's like a zip line. They slide from one side to the other. My mom was watching these kids do this stuff, and we all jumped on it, and we were all like, yeah, I'm going to give it a try. And so me and my cousins are on there, and his teenagers are back and forth. My mom's just looking at it. You see this look in her eye like, uh-oh, trouble. So she jumps up on this thing, grabs a hold of it. And I'm like, you be careful. She's 82 years old. She jumps on this thing and goes for a zip. I'm holding on to her. She goes from one zip side to the other and smashes her legs on the other side of this zip line. But she didn't let go, I tell you. But I think she pulled a bunch of muscles in her arm. Now she's got this sore arm. But look at that, 82 years old. She's still up there giving it a go. Thought it was awesome. I'm like, good for you, Mom. And she's been like now the last week and a half with, I think she's torn some muscle in her arm and her shoulder because she's in a lot of pain. So hey, who's gonna stop your 82-year-old mom from ziplining? You got to respect her when she does that. Man, 82 and still ziplining. I think it's a great thing. She's poor thing's in a lot of pain, but she keeps going. She's willing to give it a go. She said, I could tell, it's part of my. She's got that teenage kind of look to her eye. You think, oh, this could be trouble. She's gonna give it a go, and she'll get on the swings and she'll swing back and forth. She'll love it. So you gotta love her. Gotta respect somebody who's willing to put their life on the line to go do a little zip line. And so good for you, Mom. Okay, so again, we're still looking for this level to give us some support here and continue either pushing higher. We haven't got any confirmation that just because we've hit that daily inversion that we've got a reversal. That's where we're looking right now, and we're looking for a reversal at that level. That is a higher time frame premise, a higher time frame draw on liquidity, and we've hit that. So now you look for, do we see an opportunity to get on a reversal? And if you don't, then you keep letting it go further and further forward. So for me, I'd have to take this fair value gap out and that candle on a low, come back to this candle and that fair value gap to continue going shorter. Stop loss would be right above in that daily inversion that Derek had mentioned earlier. I still like the idea of coming down into here and then pushing higher. Because on the hourly, yeah, it's 11 o'clock. Yeah, I see what you're saying, Derek. We could get a we just wait for the reversal to happen. Confirm one way or another. So far, we're still finding support. I like the way we're just closing on it, opening on it, and still push higher. I can pause my mic if you guys are coming in. Yeah, you got to keep going. Thanks. What do you guys say? Where's your next objective, or where are your thoughts on where you think it might be going? Like 710. That's the top of the hourly fair value gap. We're digging into 11 o'clock here now, and we're not doing a draw back into the range. I'm gonna have to wait till 30 now. There is liquidity and new day opening gaps sitting above us for August 20th and 20th to 21st. So if that's the draw, that's another almost 200 handles above us. Now we're bouncing off that consequent encroachment on the hourly. Look at all those levels just hanging out right across that consequent encroachment there. .5 speed. Then when he says something that catches your attention, go back and slow it down. That's what I do. Yeah, that'll cut half the video for sure. I also timestamp those areas so that I can go back to them without having to watch the whole video again to find it. You can timestamp on. How do you timestamp on there? Or do you just write it down? Is that what you do, David? Get some breakfast, do some lawnmower maintenance here for the next hour or two. Spark a plug at air filter. Attention needed. See you tomorrow, friends. See you, Derek. I won't be here much longer either. I'm going to be heading to I'm going to have to do that on hang out with my family today, so I'm going to cut this short in about 15 minutes if this doesn't give us some action. Yeah, in my notes, I figured that such. I was like, oh, dude, how do you timestamp? That'd be awesome if you could just click, put a stamp there, a little marker, like a Word document. You can put those little markers across the top there. Yep. And just tab all the way to the next one. You can also use, I think ICT Index is still using all the latest stuff that he puts out there. So if you hear something that is he's been talking about, you can also use the ICT Index, and it will actually refer to specifically a information he said inside that video, and it skips through all of the ranting and gets right to the salient details. Like if you type in on ICT Index Event Horizon and see if that pulls up his latest information on Event Horizon, and it'll fast forward you right to the exact spot where he's talking about it. It'll give you the words that he's saying, it'll give you the video reference and everything. So if you haven't got that, get it. It's awesome. But somebody else has to do all the work and tell you what he said, so you can just click on that. Someone's got to get in there. Yeah, I find I've got binders of screen captures. Like I'll screen capture something he said, and I'll make sure there's plenty of room over here for notes. And then I will write down word for word what he's saying in here. This was before we had the ICT index. And I will literally draw arrows pointing at stuff. I'll do all the graphs. So a 4-hour video would take me probably a couple of days to go through, because I have to stop and type out the notes and stuff, because I'm a very visual person. So especially if he's giving tons and tons of really good information, then I'm making 20, 30 screenshots, and I'm making notes, and I'm making arrows and everything on each one of them. Like they can be quite robust with my notes. I think I can show you guys some examples here if I can find some on my screen. Mm-hmm. Oops, that's not it. That's just a written one. It's an idea. I'll draw notes like this all the time. That's how I'll make my notes. And then I'll write a whole bunch of stuff in here too. Anyway, you get the idea. That's just a look back on some of the notes I took. I'll do handwritten ones, screen capture, and I've got one of those tablets. You can write on the screen. Otherwise, we do pages and pages of them. Notes the hard way, back the old school way. So I do like the fact we've come back and tapped that new day opening gap again. On Friday, I think it is, Friday's new day opening gap. We've tapped the high. Now I'd like to see that react off of that and go higher, or see if we take this low out. And we can come all the way back into here. I do want to see this remain open though. So whatever we get off of here, see how we've traded through this and we've come back inside it. Now you're looking to go shorter. What I want to see this, if that is the new day opening gap traded to, I want to see this trade back up through this and find support at this. If not, consequent encroachment, watch this level. And see if we react off of that and continue coming back down again. Because we're digging back inside this fair value gap. We haven't taken these lows. These are all relative equal lows below us here. Do they maintain, are they still intact? We haven't had a body trade through a CAM2 model here, so you got a CAM2 going on there. Your stop loss would be sitting down here if you're going for a CAM2. You want to see this get above here now. If that just holds right there on the top of that, see how it froze right on the top? And we're getting a reaction off of that. You want to see that just keep climbing higher for this. And that little bounce off that level there is ideally what I'd like to see. Let's start climbing now. See how we just keep bouncing up and tapping the top of it? We've traded below it, so technically it's going lower till we get up on top of that. So you can see how if you're running up from that trade this morning, from this reversal that we caught here this morning, when you see that get taken to the downside like this, you trade back up inside it. That's where you can get out. So you've maximized your profit on the way up of either hitting the level that you're looking for, the new day opening gap, or the daily price or inversion fair value gap, sorry. And then when you see this breakdown, we're always looking for these. As soon as you see it break down, it comes back up inside it. That would be your ideal entry to go short, and its ideal entry to exit. So if you had a perfect entry, would have been right there. That would have been your perfect entry and your perfect exit. And you just wait for the opportunity to see that happen. And the first one is right here for a short. That would be a level of precision if you're disciplined enough to follow the rule of when you see that reversal happening, you say it breaks down. If it comes back up and taps it, I'm out right there. Or the ideal entries, if it comes all the way back into there, that would be a precision. Like you could have a perfect entry, perfect exit, and move to the sidelines and say, I nailed, I had zero drawdown and very little loss on the top side. Traded below this level now, right there on a close, you come back up inside it, found support at it. We talked about this all through here and what we wanted to see to go shorter. That was the technical level to go shorter. We did not get the higher run. We got the continuation on the downside. We want to see that get taken on a close. It did. We come back inside it on there for a close lower. We start running these lows, running this low, and there's that level of equilibrium or consequent encroachment of the daily new day opening gap we're looking for here now. We also have a fair value gap down here, busy. If you look at the range from here to here, and we're getting into lunch hour, the 9:30, if this suddenly reverses and gets through this level, get on top of it and find support, then we're going higher. So you're always keeping your eye on this level here now. Now that you've taken these lows, you want to keep your eye on the fair value gap that forms behind you once you've taken out the low. We've come back and we've touched now the consequent encroachment of the daily new day opening gap. So is the consequent encroachment that it'll return back into the range, or are we going to continue extending lower? So I'm kind of watching this now, and I want to see this level here and that candle. This candle is important. If I can get above here and come back and find support at that, we've just come back into the mean threshold of that candle and then continue going lower. We finally hit the consequent encroachment of the new day opening gap. We've bounced off of it, and I want to see this start to get some legs to go back higher. And if it continues to degrade, we got this fair value gap below us here to 598. We could be returning back to this opening fair value gap. You're holding the trade for a long, Lauriston? Good to hear from you again. Just tapping into this fair value gap here, busy now. There's a 15-minute fair value gap, just filled it there. That's filled. I do like this here. I'll back off this order block here. Back to this breaker. Let's see if we can't get this thing climbing out of here now. I want to see this break through here, find some support at this, and start pushing higher. If this becomes our reversal, the retracement at 11, back into the range. There's the 930. Let's see if this is 50% of the range. Almost 50% of the range. From 11 o'clock. We pull back into the range. Now you want to see these highs get taken. Just wait for it to get above here. So you can see how when we see these reversals happening, fair value gap, you wait to see it. If you're not sure about that one, wait for the big order block up close candle. If it trades above that and comes back to it, that's a long. And we talked about that. I'm not cherry picking here. We talked about that while it was happening. We talked about this before it happened. We're talking about this fair value gap. We wanted to see it form. It formed. We said we want to see it trade below that, and this traded below that, came back inside it perfectly, traded below that, came back inside it nicely for continuation to take out these lows and gunning for this fair value gap below us here. Got to get above here though. We'll just see. I'm going to stick around just to see if this gives us what we want, or if it just continues to roll over and come back down again. That's the level here. If we lose this low, then we're going to come back down deeper into discount array. Back to that original one that we got for the reversal. I'd be looking for down here again. Yep, I'm looking for further downside. See, we did not break above that high. So if for lunch hour, if we're gunning for this low down here at 9:30, the low of the morning, and then look for a run above the liquidity above the market after the fact. So that would be my downside objective for lunch hour. And then run back up here after lunch. You really stop between here and here. You want to see it trade below that. Find support off of that to go lower. It looks like it's finding support inside here. See how the bodies are respecting it? It's not letting us get through it. So we're either going to roll over or we're going to get back through here and get back on track and go higher. Okay, that's going to be it for me. Keep your eyes on this level here. You want to climb above that, start going higher. Or we need to get below this to dig deeper into the range. Keep your eye on that 50% level. Which is just below us here. Keep your eye here. Look for support to go higher. Keep your eye here. Go through it. When you want to see a distinctive candle get through that, come back, find support at that, and continue pushing lower. And then you're looking for fair value gaps, equal lows, relative equal lows here, back to this breaker. But other than that, I'm out of here. I will see you guys tomorrow. And keep your stick on the ice. Take care of each other out there. And I'll see you guys tomorrow. Thanks for tuning in. Appreciate it. I know you got lots of people you can watch out there. So the 12 of you who stuck around for a little session today, I appreciate it.